Welcome back to Virtual Trade. I'm joined by new trader Jenny Horne. Jenny, welcome back.
Thanks for having me back, Scott.
Great to have you. Today's session, Jenny, we're going to talk a little bit more about dividends in general, and we're going to talk about the importance of dividends, and then we're also going to say, well, let's take a list of some maybe large cap stocks, and we'll go through that list and do a little bit of filtering for things that pertain to dividends.
Great. When I first started this, I don't think I even really understood what dividends are, and now I think I've come such a long way, so I'm excited to learn more.
Well, that's a great question. Why are we doing this? Obviously because, we talked about dividends and the importance that they can play in someone's, the returns of a portfolio.
Right.
Just to remind you, we looked back for the S&P 500, and in all the years since 1926, 40% of the returns of that indice have come from the dividends.
Wow.
So it's a significant amount, and that's
Right.
why people often focus on dividends, because over the long run, Jenny, that's going to have play a rather significant part of their returns.
Right. That's a huge part of my portfolio, and
Right.
something really important to obviously understand fully.
Sure. Absolutely. All right, so what we're going to do is we're going to filter through a watch list of stocks. Now, we're going to start off with the S&P 100 stocks.
Okay.
Again, these are it's sort of a subgroup of the S&P 500. It's like 100 of the largest stocks in that group. A lot of big familiar names, a lot of blue chip names. We'll go through that, and we'll use that as our group to sort of run through this sort of criteria we'd like to see with dividends.
Okay.
Make
great.
sense?
Makes sense.
Okay, so first thing we want to do is let's change our watch list on the left side bar, Jenny. I'll have you go ahead and click on your Jenny First watch list if you can, and then in that drop down, click on that, and then we'll go down and go into public and look for S&P 100. And then we'll use that list to link to the right side, which would be our charts. Now, how do we get dividend information into our watch list, Jenny? Well, we can always customize our watch list. Right now we have, for each of these stocks in the S&P 100, you can see we're looking at the net change, how much has it changed today, and how much is that percentage change. But let's change percentage change, and we're going to move that into a dividend type of inquiry, if you will. So let's click on a little gadget here. We'll go to customize. And what we'll do is we'll take out the percentage change. All right, I'm going to remove that one. And then Jenny, I'm going to let you go ahead and search for, we're going to look for dividend yield. So that's what we want to add in this column. Dividend yield. Do you see it in there? Perfect. All right, so let's add that, move it over and hit OK. And voila, there you have it. So let's, I'm going to just drag this over a little bit so we can see that a little more clearly, our dividend yield, and I'll expand this out here a little bit. Okay, so now we have dividend yield. And again, remember, dividend yield is it's the amount of the dividend, the annual dividend,
Right.
divided by the share price.
Okay.
And so again, easy example, if you had a $100 stock that was paying $3 in dividends, that would be a 3% yield from that dividend.
Right.
Okay?
That's pretty simple.
And a benchmark, again, the S&P 500 at this particular time is about 1.75, 1.8.
Okay.
Okay, and that can move up and down as well.
So we're seeing the low dividends.
Right, now this is actually, you're right. What we're doing is we can sort by the dividend yield that we're seeing here just by clicking on the column header. Click here, up or down, it will put the dividends from highest to lowest or lowest to highest. And whichever way you'd like to see it, that's fine. You'll notice here, Jenny, right now that a lot of these are saying, not a lot, but there's several that say NA. What is that telling us? What do you think?
I would say either there's not a dividend or they don't
Yes.
have the information available.
Oftentimes that's exactly right. There are stocks that don't pay a dividend, so don't be alarmed if you're not seeing any information.
Right.
And some of the bigger names at this particular time aren't paying dividends. I think
Right, like
Amazon,
I know Amazon isn't, which is
Facebook,
wild to me. Yeah.
Right. And these are growth stocks, but again, not so much focused on the dividend yield, which is very important. All right, so what is it about dividends we need to know here, and why is it important to look at these different rates? And what's important to know about the rates or the variations? Because you can see that these range from 5 yield, and if I scroll all the way down, Jen,
All the way
you
to
can
just
see
decimal,
some are below 1.
Right.
So why this big variation, and is there anything I should be careful about when I'm looking at these numbers? Because obviously you'd think, well, I just want to take the highest yield.
Exactly. That's exactly what I was thinking.
Right, okay, and many people start off that way. But there's something you want to keep in mind. Dividends can change.
Right.
And companies pay dividends, and they can change that rate or that dividend yield. So if they decide, listen, if we're paying a 50-cent dividend every quarter, but maybe things aren't going so well for us as a company, we could lower that dividend from 50 cents to 40 or 30 or 25.
Right. I follow the stock market pretty closely, the news at least, and I remember when GE slashed their dividend, it was a huge deal because there's typically a company that pays dividends and they're known for it, and they kind of have established this with their investors. So it was this huge deal.
Jenny, that's a perfect example, and some people call that the yield trap. So in other words, if you're just looking for yield, and it really varies from that average yield level, there could be a reason behind that, and you just hit on it. So if companies are not able to continuously pay a dividend, it's because potentially things aren't going well for the company.
Right.
And that's why they sometimes cut, or what you call slash the dividend. So how could we sort of filter through here and make sure that, or not make sure, but maybe give us a little bit more confidence that this dividend payment has the potential to remain?
Right, because how could you ever foresee a company cutting their dividend? You really can't.
Right. No, absolutely. And of course, what is it that we look at? Well, if they have consistent earnings and the company's showing earnings growth, well, typically that's a bullish sign for that company and gives us a little bit of higher probability that they'll be able to continue to pay their dividend. All right. So that gives us an idea there on how we can do that. So let's link this watch list to the charts, and we have yellow for the list, and let's go to our charts, and we have yellow there as well.
Okay.
Okay, so that's perfect. Now I'm going to start off with, let's look at on this list and see what's on here. Let's make them alphabetical. First of all, we'll start there and just click up here. And I'm going to look for the one that you just mentioned, which was GE. I'm going to scroll down and see if this is in the list. EFGE.
Yep.
You see it in there? Okay, so go ahead and click on that one, Jenny, and we'll bring that one over.
Oh.
So take a look at this. Interestingly enough, the stock, obviously in the last year, has not done well. So it's downtrended.
Right.
And take a look at what happened. If you go back to last year, I'll hold my mouse down here on the chart, and you can see it has a dividend of 24 cents. Well, what was happening is as GE stock price was coming down, they were holding the dividend at a certain level. Now, as the stock price comes down, that makes that percent of dividend a higher yield, a higher number. Because remember, you divide the stock price, or I'm sorry, the yield by the stock price. Well, if the yield is holding and the stock price goes down, it makes that yield bigger.
Right. Okay, that makes sense.
So you might see a high yield and think, uh-oh. Well, if you do the homework and go behind that and see what happened, you can see the stock was going down during that time. Which means their earnings were probably going down.
I mean, this chart just sums it up. Basically, they clearly haven't been doing well. I mean, it's a complete downtrend aside from this like small bit right here that they went up for.
Sure, and take a look. The dividend, sure enough, went last year from 24, and they dropped it to 12. Right? Now with that 12-cent dividend, it still has a 4.4 yield.
When you look at this chart, though, it's not too surprising they cut their dividends. I mean, they weren't doing so hot.
So how do we get more information? Well, let's do this, Jenny. We're going to go into the Analyze tab and go to Fundamentals. Now, Fundamentals is going to give us more information about the company in a snapshot, so we can kind of see over the last 5 years, how are things lining up? How are earnings and dividends lining up? All right, so let's go to By the Numbers, and let's take a quick look. So here's earnings per share over the last 5 years. And you can see that GE was, started to slip 3 years ago, came back up, but then obviously this year, not doing well again.
Right.
So earnings, a little bit of a downtrend here. Let's look at the next column, dividends over 5 years. How were they doing over the first 4 years?
They were actually growing over the last 4 years. And then this year, they really sank.
Exactly. And then what happened is those earnings finally caught up with the fact that they decided they can't pay that dividend amount anymore, and they cut it in half.
Wow. Yeah, this is actually a great way to see 5 years in such a consolidated manner.
Absolutely. And remember, we're looking at this column, year-over-year percentage, and this is over a 5-year trend.
Oh my gosh, their earnings per share are down almost 400%.
So you can see, obviously, they've had a tough time. But again, if we would have been a couple years ago, looked at GE, saw the earnings were starting to drop and stocks coming down, but the dividend was holding, we might obviously have a little bit of fear or apprehension of them potentially maintaining that dividend.
Right.
All right. So now let's do this. Let's look for a couple candidates that might, we'll look at them on the chart, and then of course we'll look at them here as well. Let's look for something, again, what I'm going to do, Jenny, is just go ahead and resort these by dividend yield. And I'm going to look for something that's probably somewhere around that, 2.5 range level, something like that.
So would you say this is a safer range to not be super high?
Well, we know the average is about 1 3/4, so we're just kind of looking right around this range. And I know there was one right here. Let's just click on MMM. That's Minnesota Mining we used to call that, but it's 3M. That's how it traditionally goes. Stock kind of moving up and down. It's kind of where it was at the beginning of the year, so not really moving up and down. But let's take a look and let's jump right into the Analyze tab and use this as an example. Now we know that yield is about over 2.5, so again, above the average. Now let's take a quick look at the earnings over the last 5 years. How does that look right now?
Looks like they're definitely going up.
Okay, you're right. Earnings have been improving. Now let's look at the dividends. How has that been working over the last 5 years?
Also going up.
Those have been going up. So again, here's a company that, again, we're just picking one. We're not making recommendation. We're just saying this is the kind of homework you can do from a fundamental basis. If I was to move in something a little bit higher dividend, I'd still use the same principle. If I was looking up something around, let's go down to 3%, for example. And maybe what we'll do is look at, let's see, there was one I was looking at a little bit earlier. Here's CVS. Everyone knows that. You've heard of that company. If you look at the charts, stock kind of moving sideways, down just a little bit. Let's do the homework on this one. Let's go back in and look at the, again, the Analyze tab and take a look at its 5-year trends. Earnings have been moving up, as you can see, and dividend as well. So again, kind of doing a little bit of homework here. Stock action's been pretty flat over the year, but in terms of dividend yield over 5 years and dividend growth and earnings growth, looks like it's been on the uptrend for both.
The only thing that's pretty scary, though, is GE was moving up just like these last two we looked at, but then they all of a sudden dropped.
Right. GE,
so, I mean,
well, the dividends were moving up, but GE started to move down in earnings, right?
Right.
So if we put GE in there real quick, so even though you're right, these earnings were moving up, we had a big drop off 3 years ago, and then it came back a little bit, and then of course this year, another drop on top of that.
So I guess that's why both of those numbers are equally as important.
Yeah, exactly.
Doing your homework, right?
And I think that's one of the takeaways here, is that, you know, how can we look at the dividends? Well, if the company's not increasing their earnings and potentially revenues, it could be difficult for them to maintain that dividend payment.
That makes sense.
Okay. All right, Jenny, so we put a lot of things together here. Charts, linking to the charts, looking at dividend yield, but then taking a snapshot and looking at the earnings growth that goes with that dividend yield. So Jenny, what do you think about this session?
I think this is great. As you mentioned earlier, dividends are super important, and there's something I've never really closely followed. I mostly just watch earnings. So from here on out, I'm definitely going to watch dividends.
That's fantastic. Well, Jenny, thanks for joining us.
Thanks, Scott.